Leverage is the ability to use something small to control something big. Specific to foreign exchange, Forex or FX, trading, it means that you can have a small amount of capital in your account, controlling a larger amount in the market. Hi, welcome to the channel. If you are new, please consider subscribing, so that you don't miss future videos. Remember to hit the like button just to motivate us to continue making these videos. By the way, if you are interested in making money online via trading etc., visit the links in the description box below. People often ask me about the broker I use. Check them out in the description below. I have tried many other traders, but none have come close to my broker in terms of customer service, fast, seamless deposits and withdrawals, reliability of their platform, deposit bonuses, trading education, and they are also regulated by some of the world's top authorities. Besides winning many industry awards, they have various accounts to suit every taste, and you can deposit as low as $5. Now you know why I have been with them since 2018. Sign up today with the link below and see for yourself what I am talking about. Let's get into today's video. The apparent advantage of using leverage is that you can make a considerable amount of money with only a limited amount of capital. The problem is that you can also lose a considerable amount of money trading with leverage. It all depends on how wisely you use it, and how conservative your risk management is. Typical amounts of leverage tend to be too high, and it is important for you to know that much of the volatility you experience when trading is due more to the leverage on your trade than the move in the underlying asset. Leverage amounts. Leverage is usually given in a fixed amount that can vary with different brokers. Each broker gives out leverage based on their rules and regulations. The amounts are typically 50 to 1, 100 to 1, 200 to 1, and 400 to 1. 50 to 1, 50 to 1 leverage means that for every $1 you have in your account, you can place a trade worth up to $50. As an example, if you deposited $500, you would be able to trade amounts up to $25,000 on the market. 100 to 1, 100 to 1 leverage means that for every you have in your account, you can place a trade worth up to $100. This ratio is a typical amount of leverage offered on a standard lot account. The typical $2,000 minimum deposit for a standard account would give you the ability to control $200,000. 200 to 1, 200 to 1 leverage means that for every $1 you have in your account, you can place a trade worth up to $200. The 200 to 1 ratio is a typical amount of leverage offered on a mini lot account. The typical minimum deposit on such an account is around $300, with which you can trade up to $60,000. 400 to 1, 400 to 1 leverage means that for every $1 you have in your account, you can place a trade worth $400. Some brokers offer 400 to 1 on mini lot accounts, but beware of any broker who offers this type of leverage for a small account. Anyone who makes a $300 deposit into a Forex account and tries to trade with 400:1 leverage could be wiped out in a matter of minutes. Professional traders and leverage. Professional traders usually trade with very low leverage. Keeping your leverage lower protects your capital when you make trading mistakes and keeps your returns consistent. Many professionals will use leverage amounts like 10 to 1 or 20 to 1. It's possible to trade with that type of leverage, regardless of what the broker offers you. You have to deposit more money and make fewer trades. No matter what's your style, remember that just because the leverage is there, that does not mean you have to use it. In general, the less leverage you use, the better. It takes experience to really know when to use leverage and when not to. Staying cautious will keep you in the game for the long run. Now, do you have to pay all of the leverage back when you trade Forex? In short, you are required to pay back any leverage you use while trading. Leverage is debt just like any other type of loan, but unlike other types of debt, you may have some flexibility as to when you settle your balance. Your brokerage decides how much you can borrow, and when you need to pay it back. At some point, you will have to settle your leverage debt with the broker. If you learned something new in today's video, please remember to click the like button. Leave a comment with your thoughts in the comment section below. Again, hit the subscribe button so that you do not miss future videos. We will see you in the next video.